Hello, with me today I have Thomas McMahon, Investment Trust Research Manager at Kepler Trust Intelligence. Hi Thomas.
Hi Lee.
Are there any themes that grab your attention for 2024? Is it value, growth, income?
It's certainly noticeable that in the short term, when there's news on interest rates and inflation, particularly on whether we've hit a peak, whether the next move is down, whether the rate cuts are nearer, you do see the market move in a growth value dichotomy. But over the course of the year, it hasn't really been the case. If you were to look at an index level, it would appear to be the case, but that's because the big 7 tech stocks have done remarkably well. If you take those out of the equation, growth and value is not, it hasn't really driven the market. And I suspect that will continue to be the case. I think maybe quality will be more important. If we're in a weak economic environment, higher interest rates, companies that have more control of their own destiny, have stronger balance sheets, should be in a better position. So that's probably going to be more important than growth versus value, I would say.
So the UK is unloved at the moment, but it's cheap versus its own history. So which UK equity investment trusts stand out from the crowd for you and why?
The UK is certainly cheap. It has been cheap for a while. So investors might be, they've heard it all before. But I think this situation just can't persist. And we've seen an increasing amount of M&A activity in a variety of different sectors over 2023. And one way or another, the prices on offer for UK assets are too cheap. So they have to change. You're really spoiled for choice. If you really want to take the value angle, Aberforth smaller companies is an interesting way to look at the UK small cap space. It's the one really proper value strategy in the small cap space. And it's beaten the peers handsomely over 3 years, had 2 very good years in succession. They've received a number of approaches for companies in their portfolio, kind of backing up what I'm saying, overseas investors who are paying large premiums to the share price. And at times, the managers will say they don't think it's enough. It's still cheap even at this 30% premium that's being paid. So I think that's one that stands out given the value opportunity. I think if you wanted to be quite aggressive or take some risk for the long term, Henderson Opportunities Trust is a really interesting, relatively small portfolio. It's always quite geared. It's always very exposed to small and mid caps. It's always quite aggressively positioned. It tends to do really well in rising markets and really badly in falling markets. So if you wanted to bet on a long term, really strong returns from the UK, that could be an interesting one.
Thomas, are there any growth-focused investment trusts that interest you at the moment?
The outlook for growth is quite troubled, but there's a number of investment trusts that focus on a growth area that look potentially quite interesting at the moment just because of valuations. So, for example, in Japan, Baillie Gifford Japan Growth Trust is actually trading on a cheaper valuation than the market, even though it's got substantially higher growth metrics on a backward-looking and forward-looking basis. So I think that really shows you an example of a sell-off in a growth stock that's really gone to quite dramatic levels. So that stands out as potentially very interesting, particularly if you get a change in the economic environment in Japan, which has for many years, because of its own economy, has favoured growth over value. We've seen a bit of a cyclical rebound in 2023, but if we revert to the old way of doing things, then this looks like really interesting valuation. I think in the UK, Throgmorton Investment Trust historically has been an absolutely outstanding performer, and certainly could be interesting at the moment if you can take a longer term view. And also another interest rate sensitive area which could be worth considering. There's a lot of negativity around commercial property for obvious reasons to do with the valuation of property when interest rates are higher. But TR Property, which invests in property equities and a little bit in direct property, is still on a discount, and it responded very, very dramatically to a change in mood on interest rates, which perhaps illustrates there's a lot of value in that market, even though it might be quite hard to pick individual trusts, individual REITs, individual buildings which are going to do well. TR Property can really invest across Europe into very cheap real estate, as it is. The whole market is very cheap right now. So I think that is another one that stands out as potentially interesting kind of growth interest rates investment.
Thomas McMahon, Investment Trust Research Manager at Kepler Trust Intelligence. Thanks very much for joining me today.
It's a pleasure.
And thank you for watching. And make sure you subscribe to the Interactive Investor YouTube channel.